You're listening to REITcast, a podcast of the Southwest Florida Real Estate Investment Association. REITcast brings together a variety of real estate entrepreneurs from all over the world to share tips and ideas. The core purpose of the Southwest Florida REIA is to help members become more profitable and successful through networking, education, and empowerment. Here are your hosts, Jeff Tamarello and Michael Lyons.
Yeah, there's a lot of REITs in this space, and I would love to have their cost of capital of how they, for what they're willing to pay. It's like when we were doing a lot of distressed notes, a lot of distressed commercial notes back in the day. And when all the REITs and the Blackstones came into that space, the market was dead for people like us, because we can't function against, our cost of capital was higher. How do you compete? Because the REITs are really taking over this space. How do you guys compete with it, or how do you avoid them? Probably better yet.
Yeah, and you just that last part is the answer. You don't compete. You source deals that they're not looking at, and I would say that REITs have even gotten slightly more conservative in the last 12 to 18 months in self-storage. Where the larger private equity groups, when you say REITs, you're talking the larger institutional investors in general. The larger private equity firms and funds have stayed very aggressive, and a lot of it is finding deals off market. If it's going out from one of the larger brokers to the market, it's very competitive, and you're going to pay. It's hard to compete with those guys. They just don't need to hit the same returns. They think quite a bit differently as well. So their mindset is far more geared towards capital gains, and they don't necessarily need as strong of cash flow throughout the life of the deal. They're looking at it more long-term. They're typically going more for the higher quality assets, the A and the B type properties, which nothing wrong with either one of those. And B is a great property type to chase after. But when you're going after the new Class A 3-story, elevator, really nice self-storage properties, is just very competitive. So you really just need to look off market. I would say timing is everything. And just because the market is tight and there's a lot of money looking for self-storage and real estate in general, doesn't mean that you won't be able to find something, but you just have to be very aggressive. You have to be marketing, and you need to be looking in multiple directions at once. So it's not just sending out mailers and talking to brokers. You need to be dialing for dollars. You need to be talking to owners, networking, working with vendors that know the owners of these properties. And it's sometimes a lot of relationship building. So typically we're not buying from institutional investors because they're looking to maximize the value. We're buying things that are underperforming.